Good morning everybody, this is Lara from Pure Elliott Wave with your Monday to Friday update for Bitcoin, Ethereum and XRP. I'm just going to look at the price chart of Bitcoin, the entire price history, all the way back to its inception in 2010 on the monthly chart, just to reinforce the point that this is very obviously in an upward trend. The basic definition of an upward trend is a series of higher highs and a series of higher lows. In order for that pattern to be broken, you would need to see the last higher low previous to the highest high breached. So we'd have to see a new low below 4106.98 in order to be extremely bearish on Bitcoin. One of my maxims that keeps me out of trouble over the years is always assume the trend remains the same until proven otherwise, and that's what would be proven otherwise. This is an upward trend, assume it remains intact until we see a new low below 4106.98. For the very short term, Bitcoin's moving sideways in a little consolidation with identified resistance about 53,000 and support about 50,600. We need to see a breakout of this little consolidation in order to have confidence in the direction of the next trend. I expect an upward breakout is most likely. However, if we do see a downward breakout, that is also possible. Look, anything's possible, so be open-minded and flexible. If we do see a downward breakout, then I would expect it to end at very strong support at 48,000. I don't expect lows below 48,000 now for Bitcoin. If we see an upward breakout, which must be seen with an upward session, which must have support from volume closing above resistance at 53,000, then I would expect next resistance at the previous, or the only all-time high, 68,700, and we might see another consolidation before price can break above resistance in that area. If we do see another consolidation around this area, then I would expect new all-time highs for Bitcoin to possibly be end of March, sometime into April. But if it breaks out of the current resistance and support area and just rockets on up and closes to new all-time highs, then we could see new all-time highs maybe up to mid-March, possibly even a little bit sooner. I am expecting new all-time highs from Bitcoin coming up sooner rather than later now. Overall, as price is moving sideways, there's some decline in volume. That's normal behavior during a consolidation. A weak bearish signal from on-balance volume today tells us to look out potentially for a short-term downward breakout. But this signal is very weak because this trend line that on-balance volume has breached only has the minimum required 2 anchor points you need to draw a line. It's very short held and it's got a little bit of a slope, so that all reduces the technical significance. This is a very weak bearish signal, and I may yet need to redraw this line, just like I had to draw the yellow resistance line after we had a breakout above short-term resistance a few days ago. ADX is now slightly declining. There is no longer a clear trend indicated. This is normal for ADX to do when there's a consolidation within a larger ongoing trend. At higher time frames, ADX is still extremely bullish. RSI is back into neutral, so this little consolidation has now relieved some short-term extreme conditions. Normal to be expected behavior, very good to see in a healthy bullish run. Money flow is still overbought. There's no short-term bearish divergence. I'll expect the consolidation to continue a little bit further in order to relieve this extreme condition on money flow. ATR was increasing as price was moving higher. Volume and volatility returned to the market. Now ATR may be flattening off. Absolutely normal to be expected behavior during a consolidation. My Elliott Wave count for Ethereum remains the same, and I'm still expecting a little second wave correction, a short, brief, shallow pullback for Subminute Wave 2. The larger context for this Elliott Wave count is a third wave at minute, minor, intermediate, primary and cycle. So a third wave at 3 large degrees, and within that a third wave at 2 smaller degrees as well, so 5 degrees in total. This is an incredibly bullish Elliott Wave count, and now the strong upward pull from that big third wave may force Subminute 2 to be more brief and shallow than second waves commonly are. That's why I'm expecting the log function of the 0.236 Fibonacci ratio at 2776.99 to most likely be the area for support, but if price gets down there, the Elliott Wave structure of the correction is incomplete, or price just keeps on falling, then our attention should turn to the next log function of the 0.382 Fibonacci ratio, 2645.27. Normally I would use arithmetic Fibonacci ratio calculations, but here I've applied a log function to them due to the extreme volatility of cryptocurrencies. The log function of the Fibonacci ratios is more accurate for these markets. At the weekly time frame for Ethereum, there was a large ascending triangle. There was an upward breakout. The target for the breakout from the triangle is 3347. That hasn't been met, so that target is still in play, but price may not move in a straight line up to that target. There may be little pullbacks and consolidations along the way, and that's exactly what's happening. There was strong resistance about 2,700. Price reacted down from there, found support about 2,100, broke through resistance at 2,700, a short back test of support on the 17th of February, moving up and away. If we see not just sideways movement but another pullback, look out for support to be quite strong and possibly be retested at 2,700 before the final move up and away. Next resistance ahead, 3,580. The moving average situation for Ethereum is full bore bullish, with the short above the mid, which is above the long, which is below the lower edge of this chart. There it is down here. They all have a positive slope and price is above all of them. That's a full bore bullish look. Volume still pushing price higher. Ethereum has quite a strong bullish volume profile, more clearly bullish than Bitcoin at this time. ADX is still telling us that Ethereum has an upward trend. It's now extreme, but it's such a long way to go before it's as extreme as it can get for this market. RSI is overbought. There's no short-term bearish divergence. Money flow is overbought, and now there's a pivot developed with the high of the 20th of February. Not a strong pivot, but it's a pivot. I'll identify short-term bearish divergence between price and money flow. This may be relieved by a brief shallow pullback, and that's exactly what the Elliott Wave count expects. ATR still showing a strong increase as volatility increases in this market. Ethereum is looking more bullish than the other two at this time. Zooming in on my Elliott Wave count for XRP, I'm going to start to label this upward movement. This is my preferred Elliott Wave count, which sees overlapping third waves at cycle, primary, intermediate and minor degrees, with the end of minor wave 2 as a double zigzag over here. From this low to this high, this upward movement fits best as a 3-wave zigzag. You can force it to be an impulse, and you could see an impulse complete here, but it would have a truncated 5th wave. Truncations are very rare, so I really don't like labelling truncations, although it could be considered to have come after a move that was too far too fast on the 15th of February, but I think the truncation is a little bit too big for reasonable probability. And so from this low to this high, this is a zigzag complete up here. What that means is another leading diagonal may be unfolding again for a first wave. XRP does tend to do leading diagonals quite regularly. It seems to be one of the odd quirks of this market. And so for this market, I'll label this a leading diagonal. It could be. Within a leading diagonal, the Elliott Wave rules are waves 1, 3 and 5 most commonly subdivide as zigzags, but they may also appear as impulses. Waves 2 and 4 must subdivide as zigzags. Wave 4 must overlap wave 1 price territory. Wave 4 may not move beyond the end of 2. Wave 3 must move beyond the end of 1, and wave 5 may not be truncated. It must move beyond the end of wave 3. Wave 2 may not move beyond the start of wave 1. The third wave, the length of it will tell us what kind of diagonal contracting or expanding is most likely to be unfolding. If 3 is longer than 1, then it may be an expanding diagonal, which means 5 should be longer than 1 and may be longer than 3. But if 3 is shorter than 1, then the diagonal must be contracting, which means 4 must be shorter than 2, and 5 must be shorter than 1. Note, I'm stating the wavelength rules about diagonals are a little bit different. I've done a bunch of research and found many examples where within a diagonal, the third wave is the longest of 1, 3 and 5. It's something I very long suspected to be the case. I'm going to put a link to the article I published just a few days ago on my website, where I show you those examples within the larger context of a full Elliott Wave count for various markets markets. And I note also that Robert Prechter, in his latest edition of Elliott Wave Principle, his book, he's slightly rewritten his rules for diagonals to encompass the same idea, that the third wave can be the longest of 1, 3 and 5 within a diagonal for both expanding and contracting. And when you think of the personality of a third wave, that does make sense. They do have a tendency to be the longest, strongest actionary wave within an impulse, and so absolutely fits. They could also be the longest within a diagonal. I'm leaving the invalidation point down here. This is the start of minor wave 1 to allow for the possibility that minor wave 2 could continue lower as a triple zigzag. It may not move beyond the start of 1 below 0.4456, but this is my confidence point. A new high above 0.6236 would add confidence to this more immediately bullish Elliott wave count, because at that stage I'd be discarding this bearish Elliott wave count. Actually, I'd be discarding it above 0.6157. But this Elliott wave count sees intermediate 2 incomplete and continuing lower as a single zigzag, with a minor wave B triangle complete here and C an ending contracting diagonal. Because the diagonal is contracting, because 3 is shorter than 1, that means 4 must be shorter than 2. At 0.6157, 4 would reach equality with 2, and that would be the point at which this wave count would be invalid. 4 must be shorter than 2, so it can't be equal. So its limit is at that point. At that point, I discard this wave count because an Elliott wave rule is violated. So even if this is the wrong Elliott wave count, it's still a good exercise to develop alternate Elliott wave counts, because you can't be always sure you're going to be right. You have to lose the ego and just acknowledge that you're going to get it wrong. The market's going to whomp you when you least expect it, if you're so arrogant as to think that you'll definitely got the right wave count. So consider alternates and then identify at which price point your alternate wave count is invalidated, and that'll give you more confidence in your main wave count. So for example, my bigger picture Elliott wave count for Bitcoin remains bullish because it's invalidated all of my bearish alternates. Now, I could be wrong. Absolutely, and that market could whomp me and I could lose my investment. That's entirely possible. I'm dealing with a balance of probabilities here, not certainties. But this is the best way to use alternate Elliott wave counts. Develop as many alternates as going in the opposite direction as your main wave count. Have a look and see, do they have support from classic technical analysis? And have a look and see at which price point your Elliott wave rule is broken. And that's why Elliott wave is so good for this. The rules are absolute, all bar one, so you know exactly at what price point your wave count's wrong, and then you discard it. Technicals on the daily for XRP. Support now changes to resistance at the 54-55 cent range. So that area, which was previously really strong, has now been quite weakened. So now a bit of a weak resistance may occur about 54 cents. If price keeps moving lower, I'll expect support to not be breached about 0.4875. I don't know if it's going to get down that low though. The moving average situation for XRP is bearish. The 50-day moving average recently crossed below the 200, giving us a death cross. So this is a more bearish look for this market. As price is moving lower, range and volume are both declining. There is not strength in this downward movement so far. For XRP, this does look like a counter-trend movement within a new developing bullish trend. ADX is strongly declining after reaching extreme for the previous downward trend. The DX lines are whipsawing. This is normal look for ADX when there's a big trend change from bear to bull or vice versa. It's like a large ship. It takes a while to turn around. It's based on a 14-day average of past data, so it's backward looking. Still an excellent indicator though. With price reacting down from resistance at the 54-55 cent range, stochastics has a negative slope. It's moving lower through neutral. Expect stochastics to continue toward oversold and price to continue towards support simultaneously. When they both get there, that may be where the downward swing ends. That's it from me today with your update, and I'm really looking forward to meeting as many of you as I can here in London. I'll be at the Founders Arms at 3 p.m. next to the Tate Modern on the banks of the Thames at 3 p.m. tomorrow, Saturday afternoon. I look forward to seeing you there.